Africa's economic outlook has transformed in recent years, with international organizations expecting the continent's average rate of growth to exceed 5.8% this year. However, trade between countries in Africa has not seen a corresponding increase. For more on this, how to boost intra-Africa trade, we're joined by Edward George, Head of Soft Commodities Research at EcoBank, joining us live from Cape Town, and Dr. John Murray, Independent Consultant. John, I'll start off with you. Just looking at the numbers right now in terms of overall trade last year, Africa with the rest of the world, in 2011 rather, I've got that number, $133 billion. 11.8% of that is the total, or the amount that Africa trades within itself. Right. And Africa, of course, we know this is not a new story, intra-Africa trade, the smallest in the world. But are we moving forward? Are there specific regions in Africa that are making progress?
Yes. I think, Sam, definitely Africa has to move forward on this. And there are steps. I mean, these are priorities for Africa, for the Africa agenda, spearheaded by the NEPAD process and so on. I think key in this is building regional economic markets, integrated markets, and there has been progress on that, and also transport corridors and hubs, which will link the thing together. I think there has been progress. Here we sit, South Africa, in the middle of SACU, the Southern African Customs Union, which is one of the most consolidated regional economic markets in the whole of Africa, or even in the world, and the oldest customs union. And I think gradually what we're doing, and what Minister Rob Davies is trying to give priority now to with the Department of Trade and Industry, is to try to merge into a free trade area, the area around us, Southern Africa into East Africa, all the way up to Cairo. So these are priorities and they are moving forward, but things have been slow for a variety of factors.
And when we talk about these trade barriers, let's just throw it to Edward, because Edward, stating the figures there, we know that intra-Africa trade sitting at 11.8% of Africa's overall trade numbers, but how big is the informal sector? Do we underestimate how much trade is actually taking place in Africa?
I think it's true, yes. A huge amount of trade occurs off the radar. Just to answer this question on the size of intra-African trade, the problem is it hasn't really grown that much in the last 20 years. We've seen intra-regional trade in Asia get to over 50%, the same in the USA. In the EU, it's about 30%, Latin America around 25%. But Africa has never reached the peak of 15% of inter-regional trade back in 1997. And I think the real problem here is, as the other panelist has been saying today, that there is a problem with integrating the different trade blocks. Huge flows occur off the radar. Perhaps the most interesting ones are run by the Somali traders who have their own network run from the Eastleigh region of Nairobi. And basically they deal with huge amounts of sugar and rice and foodstuffs, consumer goods, which enter the East African market via northern Kenya, South Sudan, into Uganda and Central Africa, and are simply never captured. So it could be that actually the level of trade is much higher than we realize, but it's informal.
To what extent, Edward, are overlapping trade blocks an issue that complicates the system further? I mean, too many different trade blocks.
Yes, well, I think the problem is you've got at least 24 different trade blocks or groups within the African region. 25 countries are members of at least 2, and 15 countries are members of 3. If you take Zambia or Tanzania, they cross over several different trade blocks. And what this actually encourages is traders to basically play import duty arbitrage. If they realize that it's cheaper to import rice in one particular country, they might import it there, then try and re-export it elsewhere. And of course, this also leads to fraud and attempts to avoid import duties. So I think what has been very encouraging is what we've seen in SACU and SADC. They really are very integrated trade blocks considerably, and I think the EAC has really shown progress over the last couple of years, and in fact, if anything, is becoming the model that other trade blocks want to emulate.
What is the EAC, East Africa?
The East African Community. I think he's completely correct. I think SACU is a customs union, and it's a solid block down here where we are in Southern Africa, but it has failed, I think, in a way to expand its vision to other factors and other sectors. It can and should do that, but the East Africa Community, the EAC, is multi-sectoral, and it's looking at integration across the spectrum of a variety of sectors, and there's all sorts of issues. I mean, from driving licenses to academic qualifications to a regional stock exchange and things like this. So I think it really is indeed a model for the rest of Africa, And the initiative I mentioned earlier that Minister Rob Davies is trying to drive, among others, but particularly his department, his ministry down here, and him himself, is to link Southern Africa with East Africa, and by doing that, to raise some of this spaghetti bowl effect that was just mentioned of all these overlapping regulatory frameworks, which really make a nightmare of things. Now, of course, if you realize that, and also the pivotal role that Kenya has in East Africa, and then north of that you get the Nile Valley going into Egypt. Today, what we're having in Kenya when we're waiting for these elections to come out is vitally important for the integration, not only to continue in East Africa, but also to harmonize the East African regional economy with that of Southern Africa.
Edward, you're in Cape Town now for the 7th annual Africa Trade Export Finance Conference. So let's just talk about trade finance right now. What's the latest when it comes to that? What's the theme this year? And is there enough finance out there to kind of to back the increasing trade that many are hoping to get involved in?
Well, I think the impression I've got from all the different discussions is that there is enough trade finance available in Africa. There has been a retreat by international banks from the trade finance space over the last 3 years as they've been forced to shore up their balance sheets. But I think the worrying development is that it's the smaller businesses who are losing out. If we look at all of the big traders, whether it's Glencore, Cargill, ADM, Olam, Bunge, they've all had their trade finance lines oversubscribed. People want to lend money to them, in some ways expand them. And as well as the big ticket deals, things like Cocobod, Sonangol, there's been no problem raising money. But the much smaller clients who are trying to gain scale and compete with these large guys, they're finding that the doors are shut to them for trade finance. We see this in the SME sector, we see this in the trade sector as well. And I think this is a worrying trend, because we're seeing that the big boys are further cementing their dominance of the position, and we really want to see some new entrants coming in, which can increase competition and hopefully innovation.
And of course, being from EcoBank's perspective right now, from a bank's perspective, what would be the risks there of lending more aggressively to the SMME sector, and how do you perhaps spur, or what would be the catalyst to open up money to them?
Well, I think the real problem always with lending to SMEs, it just comes down to a question of credit history. For a lot of individual businesses, mum and pop shops, etc., they have no credit history and they have nothing that can really be classed as collateral. So banks simply cannot lend to them. But there are many ways of getting around this at the moment. The whole idea of setting up commodity exchanges in many African countries is a really positive step, because if you come up with a good commodity exchange and a warehouse system which is robust and reliable, then it's quite possible to use warehouse receipts as collateral. In other words, raise money on the commodities you produced. That way farmers can start getting inputs, which of course lack in Africa, and you create a virtuous cycle of financing feeding into the new cycle of crops and more commodities coming out the other end. The other issue I think interesting as well is mobile banking in Eastern Africa. They're starting now to lend on the Mshwari mobile service, lending money to people without a credit history, just micro loans which have to be paid off at the end of the month. That really opens up possibilities for farmers and traders across the region, and I think we're just seeing the beginning of that at the moment.
On the logistics side, Africa still lags. It's still the lowest in the world when it comes to the Logistics Performance Index 2012. What is going to be the catalyst when it comes to helping to spur African trade from an infrastructure point of view?
I think from an infrastructure point of view, I mentioned earlier briefly your transport corridors, which the Africa Development Bank is giving attention to now as priorities, and the DBSA, the Development Bank of Southern Africa, as well as creating trade hubs. I mean, if we can, for example, create trade hubs here in South Africa, Cape Town, Durban, for agro-processing, which is a key ingredient for Africa's future success and rural development. If we can do that, create hubs which can then link African processed agriculture to the Indian Ocean, and that goes into China, India, Indochina, and across the Atlantic. We need those hubs, but we also need them connected to the interior by transport corridors, and that's why I think the two together are very important.